Hi, everyone. Welcome to another episode of Trading Bitcoin with your host, Tom Vase. This is the last day of hanging out with these guys here in Baku, Azerbaijan. Basically, my idea, always wanted to come here, met up with all these guys over in Riga, and here we are, last night together, and everyone's off to their other cities. Everyone's going to different places. And I want to give you guys one more episode. In our last episode, we talked a lot about charts. David brought up a bunch of his charts. Willy brought up a bunch of his. And probably bring the camera forward a little bit. Probably do that if we go to screen share again. Yeah, Willy's going to do it. Kind of far from us. A little more. That's good. Perfect. All right. And I'm gonna get their take on the bigger picture. We had a bit of a drop last night, not too major. Maybe we'll take a quick peek at the price of Bitcoin. We can all have our views on it short term, and then go from there. I'm sure everyone watching this is familiar with their work. This is Willy Woo's website, Woo Bull, and David Puell is very popular on Twitter as well. So real quick, according to my trading systems of sequential, the short trade got activated last night at current price at around $9,900. The weekly chart for the first time in 10 weeks, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. The weekly chart in 10 weeks has activated a trade, and this trade is to the short side with the red 4 going below the red 3. That means this week's low has fallen below last week's low. Would I have taken the short trade? The answer is probably not. And the reason is because I am waiting for the resolution of this descending triangle. We have now fallen below the 128-day moving average, and in about 8 hours, if price remains at current level, we'll close below this average for the first time in a long time. I believe, Willy, you consider the 128-day moving average important?
Yes.
So what does this close below it mean to you?
It's quite significant. We've only ever closed below the 128 moving average once in the history of Bitcoin in 2013. In that case, the 200-day moving average held, but it's only been a few hours into it, so at this stage it's not so significant. Yeah, I'll wait for see how long it stays below the 128.
Yeah, I usually like to see a full candle open and close to be below a moving average before I take it seriously.
Yeah, I mean, I'd look at this on daily candles and take a look from the chart, covering over 2 years, 3 years.
All right, so that's my view on a daily chart. We're still in this triangle, so nothing really crazy happened. Just a short-term move. David, you see this differently?
No, agree.
Okay, let's quickly jump on a lower level time frame. Haven't really been caring much about the 12-hour. It's not really telling us or anything that useful. Same thing with the 4-hour. The 4-hour is actually holding setup trend. I did warn yesterday that I did not like the look of the CMF. The CMF was as bad as it's been at any point since the bear market, since the lows. That's what I talked about last time. You can see that the CMF on a 4-hour was a disaster. The last time it was this low was last year at the very end, and that was concerning me. And last night, of course, we fell.
But it has a bullish divergence right now.
Exactly. That's the next thing I was going to say, is that right now, even though the price fell, the CMF is actually higher than it was, a couple of days ago. So I still think we're going to be in this triangle for a little bit, and then it's going to resolve itself one way or another. I did like that. I did like the fact that the 15-minute chart, which Joe Saz loves so much, The crash happened on a 15-minute 9. One of the guys trades this religiously, and granted, it's not easy to trade because then you want to buy this thing the moment you see the 9 at the beginning of the candle, and the next thing you know, Bitcoin drops what, $300 in more than that. Wow, what's the range of this candle? This is a 15-minute candle with a high of 1100 and a low of 9600. So that is a $500 range candle in 15 minutes. Thoughts? You guys trade more actively than me. Well, maybe not Willy, but you do. David, what did you look into this? What caused it? What do you think?
What kept me bearish?
You went short, right?
Yeah, we were mostly short. What kept me bearish was the positive funding rates, as we mentioned in your last show.
Yep, that is true. We have been talking about the funding rates. I believe it's on my daily chart. The BitMEX funding rates have been positive, and they're still positive.
Yeah.
By a little bit. It almost went to zero today, but it's still slightly positive and remains that way, giving, making you guys more bearish.
It's trending. It's almost the baseline is positive these days. It's been very positive for the last couple of months. So even when neutral, we see it as bullish.
Yeah, but for now, before getting any significant long, I would expect them to go negative and preferably stay negative for a little bit. And also, it would be nice to get some prolonged period of backwardation. With that, I think there's an obvious correlation between backwardation and negative funding rates, and contango and positive funding rates.
Let's explain backwardation one more time. So backwardation is when the futures contract that's further out is cheaper than the current contract or the current spot price.
Exactly. And contango is exactly the opposite.
Is the opposite, and markets tend to be in contango.
The gold markets, commodity markets tend to be normal backwardation. That's why they call it normal backwardation. Bitcoin, for the most part, that's the other thing. There's not much history in terms of basis concerning Bitcoin, right? Derivatives are mostly an emerging market coming from mostly 2017, some of it 2016. For the most part, I align with Ugly Old Gold Stake in that backwardation, especially prolonged backwardation, is bullish, and contango, especially prolonged contango, is bearish. Same with funding rates. You can actually see that prolonged periods of positive funding rates tends to be bearish and results in tops or distribution, and prolonged periods of backwardation, like we saw on early 2019, right? The whole market went into complete backwardation and a very long, 2-month, 3-month period of prolonged negative funding rates, and that pretty much was the bottom. So if you were buying either spot or futures during that period, you did extremely well. Now both contango and rates, positive rates, got to extreme levels at the 14K top, and that of course marked a moment of correction, which is what we've been. So far it's been like a time correction, a major consolidation. Most likely, especially if you see the funding rates right now, we're going to get a price correction a little bit further, and
Yeah, and we're going to talk about that price correction going further. So before we do, the old season might have just ended last night. The olds dropped really, really hard as well. What is your views on the old season?
I don't think we have seen an old season since the start of the bear market in 2018. I think it's a complete myth so far. The whole point of alt season is that you get one, outperformance, and two, beta, which is when you have periods. This is specifically Q2 and Q4 2017, and that ICO bubble, when you can actually, as a portfolio manager or whatever, get some beta or uncorrelated assets to play and actually get some diversification out of Bitcoin, right? So in Q2 and Q9, several shitcoins actually went to zero correlation with Bitcoin, which is quite good for diversification. That stopped in early 2018 and hasn't stopped since. Correlations have spiked to 0.6 to 0.9, depending on the shitcoin, and hasn't stopped so far.
Willy, you don't think the alt season is coming back?
Yeah, if you were like most of the people that are in crypto these days joined us in 2017, and they saw alt season to end all alt seasons. So we're talking 10, sometimes even 100x when Bitcoin was doing, you know, your standard 10x. So you know, 10x above Bitcoin. So this is kind of what alt season means to altcoiners, and if you're going to use that definition, we will never ever see an alt season again, right? But if you're talking a 2x on Bitcoin, which is probably the alt season we saw in cycles before that, yes, that's entirely possible. I'm with Murad. He described exactly how I describe what we're in. It's a technical relief rally that we were oversold on altcoins. We were reaching bull divs. We were on a TD9 on the weekly on many of the altcoins, even the alt market cap. And if you go to my chart there of the global, shall I screen share or shall I use your computer?
How can I pull it? You want to just send me the link and I can pull it up?
I'll just do it now. I'll screen share my
Yeah, if you want to jump in.
I'll just jump in and I'll show you my picture drawing program because I don't have live drawing. Let's share. Am I on yet? Bring it.
Let me stop my screen share.
Okay, rejoining.
You should be able to join now.
Okay, here we go. I'm sharing my screen with you guys here. Sharing. Okay, here's my drawing app. This is where we are as of this morning. This morning. Now this is the alt cap.
I believe your exact words were, "I can't believe all these idiots who say TA doesn't work."
Yeah, exactly, exactly. So I've been this chart is about 3-4 weeks old. I drew it on my Twitter. I showed that we're coming up to some support. We also got a bull divergence on the weekly RSI, and we're expecting a bounce. And that's come to pass. We don't know how high it's going to bounce. Probably the next trend line is around here. We've got a little bit more into it.
Those are alts excluding Bitcoin.
That's correct. Alt market cap slash compared to Bitcoin's cap, right? So the one-to-one here is there. So, you know, in the 2017 craziness, alt cap was higher than Bitcoin cap. Now, if you were to look at this, you know, so we had all these technical divergences to say we're oversold here, and we're sitting on this long-term 6.5-year support trend line with 1, 2, 3, 4, possibly 5 if you call that a touch, 6th touch here. So
I think the next one breaks it.
That's right. So, but then if you look at this is a technical chart, right? But actually, it's not a technical chart. It's a fundamental chart. This is altcoin combined valuation compared to Bitcoin's valuation. So we're looking at the ratio of the valuations here, and our long-term valuations in altcoins in the 2014, 2017, pre-2017 era is in this zone here. Then we invented how to print money in ICOs. So, you know, let's follow Ethereum, run an ICO, tokenize it on an ERC20, create a utility token, and raise some money. That money is raised on Ethereum's network through smart contracts.
That Joe Lubin just told us was never going to be scalable. I can't wait to talk about that on the Law Show.
And then you've got all this Ethereum locked up in a token treasury, paying off all your shillers. What do you do with that Ethereum? Well, you hold it as other people running ICOs, and it's pushing the price up. And actually, a lot of these ICO teams started to reinvest their Ethereum into other ICOs. So you got this whole kind of printing press of market cap blowing up essentially Ethereum, but all the other altcoins going up with it. And this is where you see this rise in valuation going up to our peak here. You can even see the bear divergence here. So we've got a higher high on the cap and a lower low on the RSI, and that was in fact the peak of the altcoin market. Now we're still above our traditional range for what? If you were to remove all the utility token bullshit, this is like the dot-com bubble, guys. This is like, this model does not work. Financially doesn't work. I could show you in hard economic equations why this stuff does not work. So we have to detox back into this range here. This is in the era of mainly decentralized networks like Litecoin, Monero, Ethereum pre the ICO garbage. So we're still high. I expect this to be a relief rally based on technical indicators. Then we're going to drop below this line, and then we're going to probably have a bit of free fall. And all this to happen into the 2020 time span. I don't expect it to happen immediately, but over the long span of things, we haven't detoxed. It took a for the Nasdaq to detox and recover from the bubble. And
it took close to 15 years to get back to all-time high for the Nasdaq. And I have a whole presentation about that, about taking 15 years back to the highs for the Nasdaq. And I think Bitcoin is at least 3 times faster, at least. So my worst case scenario is 5 years from the top to new total market cap all-time high. So Bitcoin could be 2x the price. So we can have a $20,000 Bitcoin and still be lower in total market cap than the 2017 top.
I'd say that like it took us 1 year to pump. You can probably follow this trend line down. We're looking into 2020s, 2020, 2021 to fully detox out of this 2017 shitcoin bubble. But we're in a relief rally right now. It's not actually that big on the grand scheme of things. It's a little blip here, but a lot of people got excited last night because the rate at which it was pumping.
Hey, let me ask a question before I forget, because someone threw in a question in the live chat. And I think this is more for David because it's a short-term thing, or maybe Willy as well. Someone is asking me about the hidden bullish divergence. I hate the concept of hidden divergence. I only care for divergence. I don't like hidden divergence. I think it's something that people just made up. David, your thoughts, Willy?
But hidden divergence, where he's put it in some
RSI hidden divergence.
RSI hidden. So traditional divergence is what Willy described. When you have a new price high, but your oscillator shows you a low, a new swing low. So that's the blue line that Willy is drawing. You can clearly see the value of an asset going higher, and at the same time, the oscillator is giving you a lower high. A bullish.
That's a regular.
That's the regular divergence.
It's a regular bearish divergence.
Correct.
Or classic version.
Correct.
Where the oscillator precedes the movement of the price.
Correct. A hidden bullish divergence is when this is where it starts to get confusing. That's on the low side of things. That's when the price makes.
This is a good rule of thumb. Bullish divergences always manifest on the lows. Bearish divergences.
Right. But we're talking about hidden bullish divergence.
Yeah, but irrespective if it's regular or hidden, always on the lows is bullish. Always on the highs, it's bearish.
This is a very weak regular divergence.
Right, but that is a bullish divergence.
That's a regular.
At the end. That's classic.
That's a classic bullish divergence. So the person is talking about a hidden bullish divergence. So, I don't have my charts. So, do we have an example of a hidden bullish divergence? So,
in that chart, let me check.
So, a hidden bullish divergence, when the price makes that's when the price is making a higher low.
Yes.
Higher low. And the oscillator. Go ahead.
There's one here.
Right. The price is going lower, but the oscillator needs to go.
Yeah, something like that.
Yeah.
Yeah.
I don't think so.
I don't
Well,
No,
no, that's confirmation.
Yeah, no, never mind.
That's
never
right.
mind. Yeah,
The oscillator needs to be rising.
I didn't see one. Yeah, if you have like a.
Guys, I personally hate it. Let me go to my charts.
I especially like them for OVV, but not RSI and all that.
I'm just going to give you the cheat sheet. Here's the cheat sheet. All right. These are the divergences.
Right. I personally hate hidden divergence.
So that's what we're talking about, the hidden ones here.
No, we're talking about the bullish one though.
Yeah, bullish.
Right.
Okay.
So we're talking about the price making a higher low and the oscillator making a lower low. I don't like this at all. To me, this is bearish, not bullish.
I use them. They're not as strong as the regular ones, but I sometimes use them. Especially if the gap between these two touches is significant. When they're really close, they're not as strong.
Well, the whole use of so classical divergences imply trend reversal. Hidden divergences imply trend continuation. So if you have the knowledge of what's the direction of the trend, let's say you're convinced you're in a bear market and you keep getting hidden bearish divergences, you can get the top using hidden divergences. A good example, you can see it on 2018.
It's a touch screen as well, but no, I'm not screen sharing. Willy's
It's on
Oh,
here.
okay.
Where do you want me to draw?
If you go to 2018 on the
this-
Bitcoin chart, the
The
Bitcoin chart,
chart. Oh, okay.
I'm going to give you a good example of a hidden bearish divergence.
Oh, yeah. Okay.
Just with the RSI.
I
and the
need to
daily.
share. I got to share the like.
You want to share some notes?
Share this chart. Okay. Okay. So we're going to 2018.
Yep.
Shall I go to the daily?
Yep. Daily.
Okay, daily.
Yeah, well, let's not spend too much time on this. I mean, the whole point of this wasn't to do TA.
Yeah.
Like I said, I hate.
I especially like them.
divergence.
I especially like them in low time frame OVVs.
Do you want to continue with this, or should we move on?
The bear
Not
market,
really, but-
2018.
Yeah, I'm on it.
The bear market of 2018.
What month?
Or the-
What month?
Oh
yeah.
Yeah. Just leave it
At
there.
the end of the bear market.
No, the beginning
the
even.
beginning of the bear market.
Yeah.
You have. You see
You
that
just-
top on the other side?
This one?
Yeah, the top in the RSI.
Yeah.
No, that's a regular one. Let me give you a hidden one.
Okay.
You have this to this, it's a hidden one, and then
Right.
after that you get confirmation from a regular one.
There,
So that's a
there,
good
down,
trade.
down,
That's a good
right?
short trade.
So that's there. This was this guy here,
Right. So the
And then-
oscillator is rising.
and this guy here.
and the
price-
price is falling.
Yeah. So by definition, the oscillator is oversold because it made a new high while price didn't do it.
I don't need divergence to
Overbought. I'm sorry, overbought.
Right. I don't need hidden divergence to tell me this is a bearish situation. Like,
Yeah, I would take the trade on the regular divergence after the hidden one.
right. Like I'm still shorting that top, and it has nothing to do with the fact that it's a hidden divergence. Obviously the RSI is oversold. If I was using it, I see a lower high, and I don't really need the concept of a hidden divergence. It's just extra stuff
There
I don't
was-
pay attention to.
That was the second dead cat. I was just going off
If
a
you have
factor
3
there.
dead cats. And,
We're on the second dead cat right now. Probably going to grab along another bounce and then onto the next pattern.
all right. So, all right, we got that out of the way. We got altcoin season out of the way. So now let's talk about, I think all of us here are in consensus that the market is going below 9,000.
I think
With
there's
a
a,
greater than 50% chance.
No, I'm not there yet.
You're not there yet.
No.
Okay.
I would say
Oh wait, I don't have a mic. Let's put it here. So, okay, so Willy is not in consensus with over 50% confidence that we're going below 9,000.
I'd add that I'm a long-term guy, so if it works down, it works down. But like, it's interesting because we're fighting on the 128 right now. I do not think that the 200-day moving average will fail because I'm very
No,
sure
but that's down at 8,000.
that's 8,500 if you consider your date of October.
The daily 200?
The daily 200 will bottom at 8,500 with the current trajectory if your key date of October the 5th is correct. I can't see this thing wicking vertically downwards right now.
Hold on a second here. we have been below the daily 200-day moving average.
Yeah, but in bear
Never
markets,
in a bull market. And there's no way you can tell me we're not in a bull market based on-chain. Do you want me to switch back to you?
No, it's fine.
Like I've got it right here. This is the 200-day. This is a 200-day.
So it's close to me as well. Yeah.
This is a 200-day. This is a 128. In my view, we haven't broken the 128 on the grand scheme of the macro.
Sure.
That's just
I'll
a test, right? So we're even if we're descending triangle testing here and we bounce back up, that to me is still on the 128. This is the 200, right? The 200 is here. If we're looking at October the 5th, it's around the 8,500.
Not going to go up that much.
Okay. I think so. That's the current trajectory right now. So if I take us back to, oh no, I can't do it on this chart.
You know, I have the triple moving average forecast that tells you the next 3 points. That's most likely to happen.
I'm gonna try and find, I don't know, one of these things has a 128. I like to use, has that got the, no, it's got the 200.
But that's the weekly 200, not the daily 200.
Yeah, that's got 200 weekly and daily, but one of them has it. Let me just try. What was the latest one MVT ratio? Maybe MVT ratio has it. Yeah, I think this is it. Okay. The only once in the history of Bitcoin in a bull market did the 128 break, and that was right in this zone in mid-July 2013, and the 200 held. Look, it actually flashed below, but if you were to go in the hourly.
We can say that was a bearish market.
No, not under on-chain. On-chain, like everyone, if you look at this, that's dead cat bounce, bear market, that you'd expect the detox down to here, but actually it got bought up in here, and we worked up, we continued up, and that was one of those classic MVT. This was the classic MVT call of it being a consolidation where we were not in the sell zone. Oh, mind you, I've added the new moving averages on MVT because I mentioned this on the last show that because we're seeing much more lockup on the network, people aren't selling their coins, a lot less moving on chain. We have to now track the moving averages for buy sells. And you'll see that we were never in a sell zone. In fact, we were right in the zone here, and so it was not ready for a bear market until we broke into the sell there. So that was definitely not a bear market. And actually, if you were to look at,
someone is saying end of March 2017 we closed below the 128, but it has to be for more than like 1 day.
Yeah, like a whole period. Like that hasn't happened unless it's a bear market.
That's to me on a daily, that just on a daily close, you know, that's what I'm saying. What we're in right now, we're below it, but when you zoom out and look at daily closes, it didn't drop below. I mean, even here, you can see it significantly dropped below the 200, but it wasn't long enough.
Right. No, I'm with you. I completely agree with you there. So, so what you're saying is that we've never fallen below the 200-day moving average because there is some confusion whether we're talking about daily or weekly.
Yeah.
In a bull market, that's the point.
One of these things is when people say it's not going to go below this, it's very like I would say it's not going to go below this based on these metrics. It can certainly wick down, but it needs to come back up. When you zoom out, I want to see stuff like this. See that closed significantly below, and people would say you were wrong, it's broken, but it hasn't. It's got to stay below for a significant amount of time, and it didn't. This was only 2 or 3 days where it stayed below.
I'm with you. I have no problem with that. I have no problem considering that zone not a true break of the moving average.
Yeah. So
right, and I believe that can easily happen for the 200-day moving average.
With I'm going to bring us back to here where this is a 200 break of 200-day, and everyone was not sure we're out of the bear, and I said, give us, what is it, 5-6 weeks, and then I'll confirm it. You know, 5 or 6 weeks. That was about this amount, and then that was the confirmation.
Also, if you recall, back when we were doing these videos, Ben Zen talked about a scenario how we can go up to 15,000 and still be in a bear market.
That's right. There's like mid bear market rally and then come back down. And he could be right in a fully technical analysis universe, but once you start to take into account on-chain investment flows, you can see that that's not the case. Certainly not the case based on investment activity.
Okay, so you're not fully convinced we're gonna go below 9K.
That's correct.
Okay.
I think 9,400 is actually quite a lot of support.
Okay, so Willy has a greater than a 50% chance we don't go below 9K. And when us as traders, like if it wigs down below 9K for like half a day, I'll give Willy the benefit of the doubt that he was right. We are talking about, obvious close below 9K, a full candle below 9K. We're not gonna split pennies here. So David, do you give it a greater than 50% chance we're gonna go under 9K? Because I certainly do.
Yes, I would give it a 60% chance we go below 9K with two conditionals. Funding rate still positive. And, well, this is not a conditional, but if we keep testing and testing and testing support.
The 9,500.
Yeah, like that's gonna.
Right. My view is
into new lows for new demand.
My view is if we're still hovering around 9,500 going into the first week of October, I can see a $1,000 fall in 15 minutes the way we just had a $500 fall in 15 minutes. And that fall would take place from 9,500, taking us down into the 200-day moving average, which by October should be around 83, 84.
What is it right now? Is it at that level?
So at the moment, the 200-day is in 3 days, it will be at 8,225. So going into October, it will probably be closer to 8.5.
A nice confluence of.
This is the
weekly Kijun-sen, which historically catches the bottom almost perfectly, the 200-day moving average, and a lot of support just based on body profile.
We're right there right now.
Price.
81.40, roughly there.
Right, it'll be 8,225 in 3 days, assuming the price doesn't change.
Yeah, it's climbing. It's climbing rapidly.
It's not actually
so I'm really enjoying this 90-day VWAP oscillator right now, made by ICO Explorer on Twitter.
I like the 128 a little bit more.
You like the 128? Let's switch to that. The great thing about the VWAP is you can change the time frames. I like this one. This is really nice. Of course, the 128 is the magic number that you want to touch, right? For Bitcoin's personality. You'll see in a bull run, we touch this one-to-one line again and again and again, and we're right on it right now, and we typically bounce off it. It goes way back even into this 2012-13 bull run. What we did see was this sort of miniature fake out bear market in 2013 where we went significantly below it, but that was very unusual, and like there's a high probability we're very, very close to the bottom here before we get the next bounce up. A lot like these touches here, these buy the dip touches again, there. There's a little bit of room to go downwards. You can see some of the wicks wick down a little bit lower, but we're near the bottom. I don't think we've got a lot of short side to go unless we do something like this and we break down to the 200-day moving average. But I'm not sure about that.
Well, okay.
8,500. Even right now at a 9.5 down to 8.5, that's not a great short to me.
I think it's a decent short because I believe it can go lower. We're going to talk about that in a minute. Now, what is your view on the fact that the weekly 200-day moving average has been, Jesus, why can't I get out of this? Right, so you can show, I'm looking at my own, and the weekly 200, the weekly 200 moving average is currently sitting at 46. And this is interesting to me. 45, 46. And that one is rising fairly quickly as well. And we talked about it the other day. The full realization of the daily descending triangle is a 4.5. Oh, sorry, I don't have the mic. Sorry. The full realization of the descending triangle on the daily is a $4,500 drop from 9,500, taking us into 5,000. And that's where the 200-week moving average is going to be. So I believe that is possible. Is it likely? Probably not. I give this a less than a 50% chance we're going to go all the way down to the 200-week moving average, but I probably have the highest probability that it could. And I believe that is not problematic for the Bitcoin ecosystem. I believe the Bitcoin ecosystem can handle it just fine. I know I'm going to sell the house and go all in if we fall down to 5,000 and try to catch that low as much as I can. But I think, David, you see a major problem, and Willy thinks the chances of that are 0. So we're gonna 0 exactly. Say it to the mic.
Rounded to the nearest number, 0.
Right. So rounding to the nearest integer, the chances of that happening for Willy are 0. So we're gonna not bother him with this one. So we're gonna go over to David. If your probability is not 0, if it has, let's say, a 5% chance of happening, where do you see a major problem with the Bitcoin ecosystem if it goes beyond what level for, say, more than 5 days?
5 days.
So at what price would Bitcoin need to be for about a week for you to be very, very concerned? Is it below 7K?
About a week with some bearish confirmations, like looking not bouncy, right?
Right.
I don't know, 7K.
About if we're below 7K.
The perfect bottom would be 7.9K, but 7K just to round it up a little bit.
Okay.
That would be my level.
So if the price of Bitcoin goes to the low 7Ks and looks like it's consolidating in the low 7Ks, what do you think happens?
Well, a lot of the market structure in terms of mean reversion, just time analysis, like breaks down. The 200-day moving average breaks.
Mean
which
reversion
never happens in a bull run, never ever. Which by conclusion, you could say we're in another bear market.
You just got to look at these trends, like I've got
a lot of the oscillators derive from mean reversion, MVRV ratio,
People are saying that my
sorry.
Even though you talk loud, so I don't know why you talk loud like
Hope they can hear me now. A lot of the mean reversion breaks down, especially for a bull market. So a lot of the mean reversion goes back into bear market territory, or at least what would be uncharted territory. Let me give an example of that. Never ever, not even in the double bubble we had in 2013 when we popped the bubble in April. That was April, right? Yeah, April, and then another one
can I
in
just
November.
grab it? I'm just gonna.
Never in that period we closed consistently below the 200-day moving average, right? We closed below the 128-day moving average, but not the 200. That was very good support, and historically is.
Let's be clear, in a bull market.
Exactly. Whenever you actually cross it, that's an actual signal that you're in a bear market, right? So, and that's weird because in terms of mean reversion, if you look at Mayer multiple, if you look at what else? MVRV ratio, MVDV ratio, like a bunch of the versions, both on-chain and TA-wise, we didn't overshoot as severely as in the bubble of April 2013, November 2013, or December 2017. Even though we went up very fast, it was nothing compared to those periods. So if we go into a bear market without achieving that overextension in terms relative to the past, we would officially be in very uncharted territory. So maybe a bear market.
There's far too much momentum right now. It's like falling down a cliff and then sprouting wings and flying. or going the other way around. Just look, I mean, I'm looking at, you're talking about 200-day week average. That's that large dotted line there. We're currently in an expansion. We're in an expansion of these moving averages, and that's what you typically see in a bull market, right? We're going up and expanding. Even in this crazy, what you might call a bear market, we had expansion between the 200 and 200 week. And then on top of that, let's remove these averages and go on realized price, which is what the market's paid for their coins. And you can see a very, very typical repeating pattern here. We come back down, we swing up, we stabilize at the all-time high that people paid for their coins, and then we go into the big sustained bull market. Again, here in 2015-16, we swing down, we peak at the high, we stabilize, and then we swing up. And again, like I'm saying, is that we're swung down, we're at the all-time high, we're waiting for this to stabilize, and then we'll watch this pop. And that'll start this nice, fat, juicy phase of the bull market where we're not in mania, we're just getting a lot of investment coming in. And then this tail end, which becomes a little bit of a mania. But this next phase is going to be the lowest risk longs that we can, long-term longs that we can just settle into. So that's where we're heading into. There's no way I can see this going into a bear market. That's just crazy talk.
Yeah, that being said, the likelihood of that happening, you know, crossing the 7K mark, I would put it at not more than 10 to 15%. Yeah,
for the 7K?
Below.
Below
7K.
7K, like,
yeah, I'd say even below that, way below. But oh, by the way, so I think Brad asked, where do I get the VWAP? When's it going live? It's already live. It's down here below MVT signal. In fact, I like it better than MVT signal these days. I should pop it up higher. It's there on my charts there. And you'll have it. And you can just pick the time value you want. There's a 60. You can go all the way down to the 7. The 7 helps you trade these very short-term swings. Top, bottom. But they're not as reliable as the longer term.
All right. I think, David, you have to run out.
yeah. So.
I mean, I don't really have much else to say. I think we can probably wrap it up. I think this was a pretty good show. We'll keep it a little bit shorter and steal the screen share back from Willy. And yeah, we can pretty much wrap it up. And hey, guys, if you want to hang out with Willy and myself, unfortunately, David will not be able to join us on this Bali trip. Neither will Murad, but maybe the next one, maybe the next financial summit. Still a few spaces available. It is starting to get filled out, which is awesome. Lots of great traders down there and a couple of funds. So it'll be a really, really good experience. Also, check out tomvase.com. You can keep an eye on my travel schedule. I am off to Tbilisi, Georgia tomorrow, neighboring country from Azerbaijan, where I am right now. Heading out over to Georgia this weekend and stay there for a little while before heading off to Ukraine and then Prague, and then you can check out the rest of my calendar. The only in-person workshop that's taking place is in Bucharest, Romania. Go ahead and check that out as well. All right, guys, I'm going to end it here. Thank you so much for watching. Let me stop the screen share. We'll wave goodbye to you guys, and we'll see you all on the next one. Not sure if there'll be a video tomorrow because of traveling, but you never know. All right. Thank you so much for watching, and see you all on the next one.